Hello investors, it's Zil from Equitymaster bringing you investing insights to make investing simple and easy to learn. To stay updated on investing trends and the latest developments on Indian markets, don't forget to subscribe to this channel and like this video. India's growth engine seems unstoppable, with the country scaling new heights across sectors ranging from semiconductors and electronics to pharma, auto and more. This growth seems much broader, deeper and more diversified than before. Now before we move on, please note this video is for information purposes only. It is not a stock recommendation and should not be treated as such. There is no opinion or view on any stock covered herein. With that disclaimer out of the way, let's get started on the list of stocks. First on the list is Anup Engineering. It is engaged in the business of manufacturing and fabrication of process equipment required for various industries. The company offers heat exchangers, reactors and separators, pressure vessels and drums, columns and towers, industrial centrifuges, silos, and piping spools and custom fabrication. With vast experience of around 6 decades, the company contributes to several niche industries which are important for India's economy. Coming to its financials, over the last 5 years, its sales and net profit have grown at a CAGR of 24.5% and 22.5% respectively. The ROE and ROCE has averaged 16.6% and 19.4% respectively. Going forward, the company aims to grow at a rate of 25 to 30% year-on-year for the next 2 to 3 years. It's looking to achieve a turnover of around 100 billion rupees in FY26. This is expected to be supported by contributions across facilities, with the Ahmedabad facility projected to bring in 6 billion rupees, the Khera facility 3 billion rupees and Microcap Engineers subsidiary chipping in with 1 billion rupees. The company is consolidating its current portfolio while diversifying into futuristic products. The management is actively looking for collaborations or design tie-ups with established players, especially for new products and not for capacity additions in the existing portfolio. Second on the list is Worcester Pump and Industrial Limited. Worcester Pump and Industrial Limited has established itself as a key player in India's pump industry, particularly within the nuclear power sector. The company supplies essential pumping solutions tailored to nuclear power plants, ensuring reliable and safe operations. These solutions include cooling water pumps, auxiliary cooling water pumps, etc. The company has built a presence across 23 countries through subsidiaries in Italy, South Africa, Australia and Thailand, helping diversify revenue and reduce exposure to domestic policy risks. Coming to its financials, over the last 5 years, WPIL's sales and net profit have grown at a CAGR of 14.7% and 17.8% respectively. Its ROE and ROCE have averaged 15.9% and 23.6% respectively. Going forward, WPIL's focus on the government's nuclear energy mission, along with its strong domestic and international order books, is expected to drive its growth. The company is also investing in R&D in response to the growing importance of solar energy and government-backed incentives for solar pump adoption. Next on the list is Maithan Alloys. Maithan Alloys is one of India's largest producer of manganese-based ferroalloys, essential materials used in steel manufacturing. The company produces ferromanganese, ferrosilicon and silicomanganese, which improve steel's strength and durability. By focusing on a niche area, it has built an established client base and serves the infra and steel needs of growing companies. Tata Steel, SAIL, JSW, ArcelorMittal, among others, have consistently relied on Maithan for quality and reliability. The company also exports its products, with 56% of its revenue coming from international markets. Coming to the financials, Maithan Alloys sales over the past few years have remained tepid, but the profit growth has captured attention. The net profit has grown at a CAGR of 23.2% over the past 5 years. The company has averaged an ROE and ROCE of 19.2% and 25.4% during the same period. A key reason Maithan Alloys stands out is its debt-free status. Unlike many companies that rely on loans for expansion, it has grown through internal funds and good liquidity. Going forward, the company's growth prospects look good, with global manganese alloy market expected to grow at a 6% CAGR from 2025 to 2034. Some other key drivers include sustained demand from the steel production industry, EV battery manufacturing, and global infrastructure development. Fourth on the list is PTC India. This company plays a vital behind-the-scenes role in India's electricity ecosystem. As India's largest power trading company, it acts as the bridge between power generators and utilities, handling everything from long-term deals to short-term market trades. PTC India's presence extends beyond Indian borders, facilitating cross-border electricity trade with Bangladesh, Bhutan, and Nepal. Coming to its financials, over the past 7 years, PTC India's sales and net profit have grown at a CAGR of 3.5% and 26.5%. Over a 5-year period, revenues have remained sluggish, seeing a degrowth of 2%, while profit over the same period has grown 16%. PTC India has averaged an ROE and ROCE of 11.2% and 14.3% over the past 5 years. What sets PTC India apart is its asset-light model with no major capex pressure. Its focus is on growing volumes across segments like renewable energy, cross-border trade, and new market products, which provide scope for incremental growth without balance sheet strain. The company is actively introducing more products for wind-solar hybrid trading and exploring opportunities for cross-border electricity trade with Southeast Asia and Bangladesh. Last on the list is KNR Construction. Established in 1995, KNR is a Hyderabad-based infrastructure company with a strong presence in the road, irrigation, and urban water sectors. The company has a proven track record of executing large-scale projects across India, particularly in Andhra Pradesh, Telangana, and Maharashtra, positioning itself as a reliable contractor in both government and private sectors. It stands out as a microcap with strong growth visibility and disciplined execution, plus strategic project wins. It has a good presence across high-demand infrastructure segments. Coming to its financials, over the last 5 years, the company's sales and net profit have grown at a CAGR of 14.2% and 31.4% respectively. The ROE and ROCE have averaged 18.8% and 22.9% respectively. KNR has recently secured big projects, including a 2 billion rupees lift irrigation project in Telangana. The company benefits from long-term structural tailwinds in the Indian infrastructure sector. With government initiatives focused on road development, irrigation, and urban water management, KNR is well positioned to capitalize on sustained project inflows. So to conclude, history suggests that during any major economic boom, the companies that take an early lead and consistently innovate have created immense wealth for shareholders. India is currently experiencing such a boom. Transformative government initiatives like the PLI schemes and an aspirational population are fueling a domestic consumption boom. For investors, the microcap space in the stock market presents exciting opportunities, but the risks are also high. Careful evaluation of financials, market positioning, corporate governance, and long-term viability are crucial. That's it for today. Don't forget to like this video and share it with your friends and family and make them as smart as you are. This is Zil from Equitymaster. Thanks for tuning in.